Welcome to today's Lunch and Learn webinar, 8 Ways to Increase Your Company's Sales Tax Audit Risk, brought to you by ArcherPoint and Avalara. The costs associated with negative audit findings can wipe out the profits of a business, and if you rely solely on manual accounting solutions or disconnected tax tools, you might be unintentionally pulling a trigger that could lead to an audit notice. Our presenter today is Mark Rowe, Regional Sales Manager for Avalara. Mark comes to Avalara from a background in software sales ranging from data quality solutions to CRM. He also brings a business services sales background from ADP and Cintas. In today's webinar, Mark will discuss the 8 most common sales tax mistakes, how to address compliance proactively, and how to stay up to date on sales tax changes. Without any further delay, we'll go ahead and get started. Mark, the floor is yours.
Hey, Suzanne. Thank you very much. So, as Suzanne did a great job of introducing, my name is Mark Rowe with Avalara, and we're just going to talk mainly about some of the pitfalls, and as you'll see, in doing your sales tax manually, and the 8 ways that could lead to create greater exposure to a risk when it comes to audits, when it comes to sales and use tax. So kind of the agenda is, first we're just going to go over generally what sales and use tax are and what you have to do to be compliant, some of the pratfalls that we come across and missteps that can take place when you're doing things manually or not have a repeatable process, as well as ways that you can automate your tax compliance, and I'll talk a little bit about how Avalara can help out there. And I'll leave my contact information at the end as well. So without further ado, let's get going here. So sales tax. So a couple things we want to first outline is the difference between sales tax and use tax. And it's really more of a nomenclature in that sales tax is really, if you draw a picture of the map, like I'm in Washington State, if I were to sell something, I'm on Bainbridge Island, and I were to sell something from here to somewhere over in Seattle, that would be known as sales tax. So it's really just selling something within originating and ending within the same state. Use tax is very similar. It's just, or another way to refer to it is seller's use tax. And it's really imposed on the consumption or use of tangible property in the state. More or less, what that really boils down to is, say, I bought something from a company in Florida and had it shipped here to Washington. That company, if they had Nexus here, would be, paying use tax. Or if they had no presence, there is something called consumer's use tax, which a lot of times accountants get confused with on use tax, but really, I should actually have to go to the state and pay for that online purchase or something like that I didn't pay tax on. Does anybody do that? No, but just get the idea that sales tax is really referring to intrastate or only things that sourced within a single state. Use tax is when you might be buying something from out of state. One thing that's complex about sales tax is that there's over 11,000 taxing jurisdictions, and with each one of those there becomes rates, rules, and boundaries they're all a little bit different, and changes happen all the time. So anything from a tax rate change, a tax holiday, like in Florida right now, there's a tax holiday on things for hurricane supplies like plywood and batteries and things like that. As well as there could be specific taxing jurisdictions for things like highway improvements or, say, a transit authority or things like that, where you're collecting tax on those type of transactions in a specific area. So geographic boundaries can be really important when it comes to sales and use tax. So accuracy, it's one of those things where it's a pass-through. Just like payroll, they expect you to know all these rules and regulations and do it accurately. And so what does it entail to actually do sales and use tax correctly? Well, you have to calculate, report, do your returns, and then pay or remit your funds. So a lot of it has to do with, do you know your Nexus rules? Should I be paying in certain states or not based on my physical presence? And I'll talk a little bit more about how those are specifically changing. Do I do a lot of transactions to distributors? So do I need to collect exemption forms because I don't owe tax on those because they're going to be reselling to another client and then collect tax on that? Where do I go to research, the right rates? You have to know the right rules and validate the addresses to make sure that that address is in the right taxing area. Is my products or services taxable? So you also have to do research on is what you're selling or service you're providing taxable within every jurisdiction you're working with that you have Nexus. And as well as sourcing, when we're talking about sales tax or use tax, those come into play as well, meaning based on the destination of where it's shipping from, there could be different tax rates and depending on where it's going to. So those are things to keep in mind. So one thing also is, a lot of times people see taxing jurisdictions as just, I line up my zip codes and that's how, so say a city has this specific zip code, those line up directly and correlate with sales tax. Well, that is actually incorrect. There's many examples I could show you or talk to you about, but there are classic examples of, somebody next door being in one tax rate versus another because of a special taxing jurisdiction or, across the street is a different city. So basing any of your taxing jurisdiction just on zip code can get you into trouble. Which leads back to, so we have to do, as a company, you have to do all these tasks just to keep up to date. So researching the rules, rates, and regulations. And there's not a whole lot of other resources out there other than if you, employ somebody else to do that and do it full time or get a CPA who's, or a sales tax specific lawyer that knows everything about these situations. One thing that's creeping up right now is states are hurting for money. As of in 2013, 31 states are projected to have a deficit of over $55 billion. And so they're hungry to fill those gaps. Well, they're not typically, especially just coming out of recession, not wanting to raise, property taxes or things like that. So they're going to go after sales tax because it's an easier thing to do because it doesn't raise tax on their voter base, and they can help fill the gap without raising taxes and doing things that are unpopular within a recession economy. A couple of the things that they're doing is they're hiring auditors. So California just announced that they're hiring 100 new auditors. A good example is Idaho. They actually hired 48 temporary auditors the other year, last year, and they were told to go out and find ways to recoup some of their budget deficit, and they were so successful that they were actually hired on full time. So you can see that the states are definitely hurting for the money, but they're also finding ways to fill those gaps by going through audits and finding where people are not complying with the rules. So let's transition into some of the 8 common compliance missteps that a lot of companies go through and don't really understand the risks of doing them. So let's start with the first one. So they underestimate the true cost of manual sales tax compliance. So really what that boils down to is, hey, it's cheaper just to do everything ourselves, and we've done it the same way, we're always going to do it that way. So lots of companies don't realize how much work that goes into actually doing the sales tax, and just staying compliant. Wakefield Research last year did a study and found that 11 hours per week was solely devoted to making sure the sales tax were calculated, the returns were done and remitted correctly. So that's a significant chunk out of any accountant or controller's time, depending on who is doing that in your organization. And especially in the economy as it is right now, as people are recovering, we've done polls and we've shown that CEOs are looking to grow revenue, top-line revenue, and these types of pass-through activities are not driving revenue, and they're revenue neutral. So ways to help offset that as well as do it correctly, I think, will be paramount in the future. Number two, address sales tax compliance reactively rather than proactively. So the attitude of, we'll worry about it later. So one of the things that can happen later is, within audits. So if you are luckily picked to get an audit, the actual audit is, an assessed audit can be up over $30,000 per occurrence of an error. And just to manage that audit, so Wakefield found that just the overall total cost of managing a sales tax audit is over $96,000. So not only do you have penalties, but you're having somebody parked in your office or doing it remotely, and the time it takes people to pull the relevant information that auditor is looking for, whether it be forms and reports, in order to fulfill what their requests are. So this can greatly reduce the productivity of your staff, as well as obviously cost you a lot of money if it's done incorrectly. Number three, keep our paper copies for relevant documents. So I'm just going to file everything in the back cabinet right now. So what can happen by just putting compliance documents is similar to putting your bank deposits in a cabinet in the back. So a comprehensive and well-documented sales and use tax compliance process is critical to solving any potential issues. Without a process, it's more difficult for a company to justify its calculations of payments. So when an auditor comes in and they see that you don't have a good repeatable process and it takes a long time to get information, it can make it glaring to say, I should dig in here and look a little bit closer. Number four, fail to register with the correct jurisdiction. So, the attitude could be, we don't have Nexus there, so we don't need to register. There can be fallacies there in that, the old rules are changing, and I'll talk a little bit about that down the road, but essentially, just because I don't have a physical, presence there, meaning a warehouse or, a satellite office, doesn't necessarily mean that I don't have Nexus in that area. It could, with the way states are looking for money, if you don't account for some of those changes, and with the technology such as internet changing the way states look at Nexus, you really need to be careful in understanding, how those requirements may change. For example, do you have satellite employees working out of their house, trade shows? So we'll talk a little bit about that a little bit later. But just keep that in the back of your head that the old rules of Nexus are changing. And there's also political factors that are coming right now called the Marketplace Fairness Act. And you can research that, but that will essentially, if it was passed by the Senate, if it is passed by the House, could definitely alter the future of how we view sales tax and who is paying it. So rather than just where you have location, it could require you to be filing and remitting and collecting taxes in all areas that you sell to. Number five, so we remit sales and tax collections improperly. my business is too small to be audited. So the last thing you want to do is put you in a situation where you feel like you'll just slip through the cracks. And a lot of times, the situation comes where, states have a formula for selecting businesses, and those aren't disclosed. So states often base audits on sampling of tax returns. However, other processes and patterns can cause closer scrutiny. So there could be red flags that bring those up, and a lot of times, you're most likely going to be audited by not your local state, but a state that you do business in, that maybe you do a lot of transaction in, and they feel like you have Nexus there, and they're going to start inquiring. So whether you're big or small, a lot of things can bring things on the radar that can affect you towards an audit. One significant thing is 4 out of 5 businesses will be audited at least once in a life cycle of their business. So odds are you're going to get audited regardless of your size, no matter how small or large. With 44% of accountant professionals, and this is provided by Wakefield Research, who've been through an audit, they say it's more stressful than a divorce. Now, I haven't been through one, but I could imagine it's not real fun. So the last thing you want to do is open yourself up to something's going to be a long and drawn-out process, and it's going to hurt you in the long run. So on to number 6. So we're going to ignore exemption certificates and use tax management responsibilities. I take my customer's word for it. So this can be a big trap here, because one small error can accumulate into a very large audit risk exposure. So, those one customers that we take their word for it, or we have a exemption certificate that is out of expiration. Maybe it was a $100 invoice and they avoided $10 worth of tax. Well, if you don't have a valid exemption, that $10, depending on how many transactions they've done with you and how far back they can go, can really multiply into a large problem. The main thing is, you don't want to mismanage those forms, because they have real dollar amounts tagged to them, and auditors specifically look for this in determining if a business is lacking the proper documentation to prove that certain transactions are not taxable or exempt. The last thing any company needs is for examiners to question the rationale behind reports and conclude they're merely constructed to design or avoid payment of legitimately owed taxes. So you don't want to feel like you're just avoiding tax and trying to skirt the law. So having a good way to manage all your exemption certificates, I'll talk a little bit more about how that can be really important, but just know that those are easy targets when it comes to auditors. So when we come to number 7, we have identify Nexus obligations correctly. So a common statement, we only sell into that state using our e-commerce portals, so we don't have Nexus there. So as I mentioned, the long-established Supreme Court case of Quill Corporation versus North Dakota in 1992, it really set the ground rules of saying, you don't have to collect sales tax unless you have some significant physical presence there. And as I mentioned before, significant physical presence is starting to change. Now, some states are refining Nexus because of widespread internet business. So a lot of people have e-commerce attached, even though they do have a large distribution network. And so you have to be careful what types of activities you might be doing that could create Nexus. So questions like, do you have traveling salespeople? Do you have contract labor? Do you have people who sell your information, your products or services in another state? Do you have company residents working out of their home? Do you own or lease real or personal property in another state? Do you promote your products or services in that state, or do you even all the way down to just attending a trade show. So every year this grows, so you really have to be cognizant of, as your business grows, to understand how your growing nexus might affect your sales tax obligation. And now to number 8, we have ignoring the changing sales tax landscape. So a common phrase could be state and federal tax laws don't apply to my business. But as we talked about earlier, in the way that state governments are cash starved and tax auditors are being hired all the time, companies are granted little latitude on sales and tax calculations and remittance and compliance. The relentless efforts appear to be paying off as the U.S. Census Bureau reported in a recent report of state and local government tax revenue. According to the report, state tax revenue was up 5.21%. So they're doing a good job of trying to recoup the cash that they feel is rightfully theirs. And one thing that this represents is, where do the states get most of their tax revenue? Close to 50% of all revenue for states are coming from sales and use tax. In the state of Washington, where I'm at, it's 51%. So it means a whole lot to fulfill budgets and critical services that they provide. And so having that information and knowing that they're looking for money without having to raise taxes that will cause politicians to lose their jobs, these are kind of the low-hanging fruit area that they can go after to help fill those holes in the budgets that are happening. So with that being said, what can we do to help relieve doing it manually, and what kind of automated solutions are available? And Avalara has several that can help alleviate a lot of those 8 pitfalls that we had just gone over. Our main calculation engine, called Avatax, is a cloud-based solution which can be integrated directly into your ERP solution like Dynamics, as well as we have over 300 connectors or integrations. So if you have other add-ons within your specific Dynamics portfolio that you would also want to integrate, or e-commerce, we can also gladly work with those as well. But we can provide the rates, rules, and regulations right within your system, and I'll show you in a little bit exactly how it works. But we'll provide you the sourcing rules, so what tax should be applied for whom. The product taxability, we have what are called taxing categories. We do have proprietary categories where we can we do all the research and keep that up to date to know if your products or services are taxable across all those 11,000 jurisdictions, so you don't have to do that research any longer. And we provide instant reporting as well as address validation. So if you're shipping products and you want to make sure you're getting it in the right address as well as a good address, it will certify and put it in a USPS coded format, zip +4 code, so that it'll properly be done, as well as secondhand, it'll help reduce any charges you might have if you're sending UPS, if you're not formatting things correctly. But it also will geolocate it, so it's not just on the zip code, but it's based on the rooftop. And then we give you instant reporting as well, so you can see at our admin console, which is a website that you can log into at any time and see a whole list of all your transactions, as well as do reconciliation within your current ERP. We also offer something called Cert Capture. So I talked about some of the pitfalls, especially when you're dealing, maybe you're not doing so much sales tax, but you do a lot of transactions to resellers or distributors. You need their reseller certificate or their exemption certificates to be able to prove that they should not be taxed on those. So with Cert Capture, it's really a renewals management solution. It's not just an electronic file cabinet, but it allows you to stop the way you've done it before, in that you have to call them, they have to find it, fax it, or scan it over to you, and then you put it in a filing cabinet and forget about it. Well, as I had mentioned, those forms are critical to be up to date, filled out properly, and in many states they do expire. Even though the form stays the same, the information needs to be updated on a new form, in some cases on a yearly basis, like in Florida. So what Cert Capture allows you to do is you can ping via email the customer, and they can go right in, select the jurisdiction that you need that form from, put in their ID number, and it will create a new form for them, and it will send it to you for approval. And you can also have a dashboard that you can easily access from the web and show you what's expiring, and they could even set alerts as to when some are coming up for expiration, so you can update those and get those requested out. And a quick anecdote: I talked to a customer the other day that was had previously been through an audit, and they were managing several exemption certificates, and it took them literally a day to find some of that information. So this can put everything in the fingertips and get an answer to any question by an auditor within seconds, because it can be pulled up. And then the other part of the whole solution is the return. So not only can we do all the calculation and provide all the rules, rates, and boundaries for the proper sales tax for each transaction, we can also file the returns for you. So rather than having to learn each different tax return within each area, because they can be very complicated. I've seen examples of the California tax return, and it's mind-boggling to try and figure out how to do that correctly. So we can actually take that burden for you. And by just going in and approving and reconciling that each jurisdiction looks correct based on the calculations we've done for you, you can reconcile it with what you have in your ERP dynamics. Then essentially you can send one amount of money to our trust account, and we'll collect, file, and remit everything for you. And we'll also manage any notices that you come back to you from the state. So if you have any inquiries back from the state, us doing your returns, you can either have those directed directly to us, or we can respond to those on your behalf. And as well as if there's any early discounts for submitting on time or early, we will make sure those are all done on behalf. Or if it needs to be paper or electronic, we'll either fill out and mail the proper form for you in mail, or do it all electronic as well. So it definitely takes the burden and lowers the amount of time that you're going to have to do. As mentioned, it was about 11 hours a week. It's going to eliminate the majority of that time spent in trying to complete those tasks. So as I mentioned, how does it work? So again, we're a cloud-based or web-based solution, and all the rates, boundaries, and taxability, we plug in right to your ERP system. So rather than building your own tax rates and tax tables that you had to research and keep up to date for each specific jurisdiction, we do that for you on your behalf. And when you go to put in a new invoice or a sales order, it's done in 0.4 of a second. So it's really, really fast. And then we also automate those returns for you, in that you approve the amounts and you remit one time to us, and we'll do all the work to those taxing jurisdictions. So it's an end-to-end solution that solves many of the pitfalls that come with doing everything manually. And how can this reduce the audit risk? Well, after looking at some of the solutions and some of the pitfalls, it's good to do a Nexus study. So make sure you understand where you have Nexus, if you're not quite sure, you know, you look for solutions, whether you have a CPA or we do also offer professional services that can do a study for you to make sure you understand where you should be collecting and remitting tax. Stay up to date on the rate, rules, and boundary changes. So, you know, you could do that yourself, or we have an automated way of doing that. You can report consumers' use tax. We also have ways to help you, you know, collect and remit that, or calculate it properly, excuse me. Be compliant from day one, especially new business. So if you are a new business and you're just starting out, we do have ways to help keep you up to date. But knowing if you are new, these are the last things you want to worry about when you're growing a business. As well as automate with technology. So, you know, this type of sales tax automation, the technology is not new. What's new is that, you know, with the cloud-based solution, we're able to expand and grow very rapidly in that we have all the connectors that you would need. So now that we have a solution that can instantly plug in, you know, through integration into your current ERP, you don't have to spend, you know, years developing your own solution that could be on-premise or done manually. Also, you want to make sure you have and understand your filing requirements. You always want to make sure, you know, where, you know, what time frames you need to file. Is it monthly, quarterly, yearly, and in which jurisdictions? Calculations that are rooftop accurate, so you definitely want to look for solutions that can do that versus just basing it on a zip code. Make sure that all your products are taxed correctly and know the taxability within those jurisdictions. I kind of mentioned that Avalara, with the address correction, we can accurately rooftop geocode that, as well as we do have taxing categories that can help you keep up to date on if your products are taxable in which jurisdictions. Keep detailed sales records and create a repeatable process for managing exemption certificates. So those are some of the keys, you know, to help you out there and help reducing that risk. With that being said, I really appreciate your time today. Again, my name is Mark Rowe with Avalara. My contact information is here provided, so feel free to give me a call or email me if you have any questions, and I'd be happy to help you out. Thank you very much for your time today.
All right. Thanks so much, Mark. We appreciate the presentation. And everybody here at ArcherPoint appreciate you setting aside a few minutes of your busy day for this webinar. We hope you consider it time well spent. To help us to continue offer value, we'd like to ask you to take just a few minutes more to give us your feedback and let us know what other topics you would like covered in future Lunch and Learn webinars. Simply send your comments to info@archerpoint.com. That's info@archerpoint.com. And let us know what you think. Again, we do appreciate your time, and this concludes today's session.